Good morning everybody and welcome to today's webinar on preparing for insurance tender during the pandemic. So today's webinar is going to be a little bit different, where I've got a panel of special guests and they're going to be taking questions from myself. So the special guest consists of brokers and insurers. So today we've got Alison Goodwin, who is from Aon, who is a broker, Kevin Morris from Zurich Municipal, who is an insurer, Alex Ross from Willis Tower Watson, who is a broker, and Simon Loughran from Towergate Insurance Broker. So first of all, I'm going to do my introduction and then I'm going to pass over to the panel just to give a brief introduction of themselves. So I'm Sarah Jarvis and I'm a category buyer here at YPO for corporate and financial services. Two of the contracts that I look after is insurance placement DPS and the insurance brokerage framework. So now I'm going to pass over to Alex just to give a brief overview.
Good morning all. My name's Alex Ross. So I work as an account director for the Willis Towers Watson government sector practice. So I support authorities from across the public sector with their insurance requirements. So my clients include NHS trusts, central government departments, local authorities, and generally any other area of government. Thanks,
Alex. Alison?
Morning, everybody. So I'm Alison Goodwin. I'm the UK Public Sector Practice Leader at Aon. I've been a broker for approximately 20 years and prior to that worked as a risk manager in the public sector for approximately 12 years.
Thank you, Alison. Simon?
Yeah, good morning. Simon Loughran from Towergate Insurance Brokers. I've worked in the insurance industry for longer than I care to remember, so I'll just say it's 30 plus years, otherwise it makes me sound like an old fart, basically. So I've concentrated mainly on education, public sector, further education, independent schools, higher education, and charities. So those are our specialisms, and I think they fit quite neatly with the YPO profile as well.
Thank you, Simon. And Kevin?
Morning everyone, I'm Kevin Morris from Zurich Municipal. Zurich Municipal basically delivers insurance services in the South, North and Scotland regions. I look after the Northern region, looking after our local authority, public service, customers, fire and police, and I've been in the industry way back till about, what, 1984 or so now, working for MMI and then Zurich Municipal.
Thank you, Kevin. So before we get started, I'd just like to go over a few items so you know how to participate in today's event. As I mentioned earlier, today's webinar is a question and answer session. You've all joined this webinar in listening mode only, but we would really like you to participate in this webinar by asking questions. And there's a facility at the bottom of the screen, a Q&A box. If you ever throughout the webinar get any questions, please ask them in there and we will try to tie them in during the webinar, if not at the end. If it comes to a point that we've got we can't answer the questions because we will get cut off at 12 o'clock, we will respond to your questions after today's webinar. So let's get started. So I think the first place we need to start is to actually hear what's actually going on in the marketplace. So Alison, do you want to give an overview for us, please?
Sure. And it's a bit of a tale of woe, I'm afraid. It's not great news, but we are in a situation where the market is hardening, and that means that prices are increasing, and it is now, as we sit here today in 2020, right across the board and all lines of business. The reasons behind the hardening of the market aren't specifically COVID related, and I know that that has been reported in some cases, but I'd like to dispel that myth. And the hardening market began way before we knew about COVID. The first signs of the market hardening started back in 2018 with the financial lines market. So that's professional indemnity, directors and officers, crime, officials indemnity in public sector terms. And those lines of business started to consolidate and the rate started to go up. The reason behind that at that time was that there was a review done in Lloyd's, and Lloyd's felt that those insurers weren't holding enough capital. That meant that some of those insurers decided to leave the market. Some needed to increase their capital holdings, and some just decided it wasn't the business for them anymore. So reduced competition, increased capital costs meant that rating went up. So that's where we started. Round about the same time, we had discount rates changing, and that impacted on some of the large losses, particularly in the casualty and motor sector. And we started to see that filter through into rating in 2019, particularly with regards to the public sector. The public sector is a little protected from the wider market because it's so niche, and we generally see a bit of a lag between what happens in the general market and the public sector market. But definitely in 2019, we started to see the impact of hardening on the casualty and motor sectors. Round about Christmas, if everyone can remember back that far, an awful lot's happened this year. We started to see property ratings change as well. So tenders that were done during 2019 were still delivering a good result with property ratings, and we were still delivering savings for property. That was offsetting the increases that we were seeing on casualty and motor. But round about Christmas, the beginning of this year, we started to see property rates creep up as well. So any tenders that have been done this year are not delivering savings in the way that they have done in the past. The main influencing factors, I've mentioned the issues with the financial lines market, but there are also some wider issues. 2017 was the costliest year on record for natural catastrophic disasters. And as a result of that, reinsurance costs have gone up dramatically. And when reinsurance costs go up, that's passed down the chain, and ultimately end users' premiums go up. Claim settlements have increased, and the reduced capacity that I've mentioned has also led to less competition generally. We're now facing a couple of big challenges, and I'm not going to talk too much about COVID because I know we've got questions about that coming up later on. So I'm not going to steal anyone's thunder, and I can see Simon nodding, so I won't steal anyone's thunder. But we've also got Brexit on the horizon as well. So two major challenges that will both affect the insurance market considerably and will potentially both lead to further hardening. The other areas that I'd like to just touch on are that coverage is the hardening market doesn't always manifest itself in policy, in premium increases. Policy coverage is also an area that we have seen impacted, and coverage is being streamlined. We are seeing some wordings being consolidated, again, not just COVID related. One area in particular is around liability policies and their intention with regards to cyber cover, some of which has been very unclear in the past. And there's a piece of work going on to make sure that policy wordings are clearer. Insurers impose quite strict risk standards, and I'm sure Kevin will mention that later on when we start talking about what's required in a tender. And we need a lot more detail when we're putting together a tender. So the key message really is when you're entering a hard market or when you're in the middle of a hard market, any tender exercises that you're looking to do allow plenty of time, include more detail, and start sooner.
Thank you, Alison. Has anybody else got anything to add? No? So Alison has mentioned about the hardening market. So Simon, can you tell us what impact the hardening of the market is having on public sector tenders for insurance covers?
Thanks, Sarah. Well, I think the obvious thing that Sarah mentioned is increased premiums. And for the reasons of reduced capacity, tougher underwriting, restricted coverage, they're all impacting on the public sector in particular. The other area would be reduced cover, the application of exclusions, which is likely to be in 2021, particularly with COVID exclusions, particularly on business interruption and travel insurance, cancellation, and similar types of cover. Potentially also we might see insurers withdrawing from particular sectors, maybe in the public sector. The care sector is under a lot of stress at the moment, so we could see insurers either withdrawing from those sectors or being very selective about the type of risk that they will underwrite. The other area is going to be, and this is where brokers come in to some extent, which is in their support, will be on tighter risk control requirements. So insurers will be looking for outlines of risk assessments on COVID. They'll be looking for tighter risk control requirements, particularly on property, for fire alarms, intruder alarms and such like. The other aspect within the public sector in particular is going to be, because prices are going up, that more organisations will be looking for alternative quotations. So it's going to be a knock-on effect. So there's going to be an increased number of organisations going into the insurance market to see if they can get a competitive price. So that's going to put a strain on the insurance industry, and the insurers are then going to be more selective to some extent about which business they're going to pick up. So it's from a broker point of view, and also the YPO point of view in terms of procurement, it's very important that we're all geared up to expect the increase in the volume of quotations coming into the market. It's human nature, isn't it? If your price goes up on your car insurance, you will go and have a look round. Same applies in the commercial world. And the final point was that some insurers now are not offering 3-year arrangements because they're not committing to the type of cover they will offer, and they're not committing to the premiums because they're uncertain about the level of premium over the next 2 or 3 years. So traditionally, we've had 3-year agreements or 5-year agreements, and potentially in the future, we're only going to see 12-month agreements. So that's it. In terms of the public sector, I think Kevin's going to now talk on how COVID will affect upcoming tenders. Is that right, Kevin? Unless you want to introduce it, Sarah, sorry.
No, it's fine.
Even your thunder there.
It's fine. I was just going to say, does anybody want to add anything to what Simon's just said?
Can I just say that Simon mentioned unplanned tenders and the fact that LTAs are being broken, and they are being broken. We're seeing more broken LTAs at the moment than I've ever seen in my career, and my entire career has been spent dealing with public sector insurers, so that's a very long time. And it's an automatic reaction to go to tender, but in many cases the increase that's being put forward is being put forward for a reason, and it's not necessarily the right thing to do. The right knee-jerk reaction to go to tender isn't always the best thing for the organisation. Negotiating with your holding insurer, if the increase is deemed reasonable by your broker, might be a far better and more measured response. If you go to market with what we would describe as a distressed claims experience, for instance, so if the break is claims driven, you're not going to get better terms at tender.
Can I just add something to that as well? Is that the insurers generally, if they see a risk every year, they're less and are unsuccessful, they're less likely to give you a competitive quotation. So I think going forward, the approach is going to be more concentration on the risk management culture of the organisation, and from a broker point of view, that's where we come in, where we can put this over to the insurers in a positive light.
Thank you. Kevin, Alex, have you got anything else to add?
I don't know. It's a pretty comprehensive answer from Simon there.
Sarah, I've got a couple of related comments, but I might as well just go forward with the COVID-19 question. All
right, okay, yeah, that's fine. So as next question is that we're still dealing with COVID, as we all know. On Saturday night, Boris Johnson announced the second lockdown that we're going to go into from Thursday. So his question is, how is this going to affect upcoming tenders dealing with COVID-19, Kevin?
Thanks, Sarah, and I hope everybody can hear me. There was a comment before that I was a bit quiet, but I'll try and speak up a little bit, but please comment if you can't hear. I've looked at this really from 3 different perspectives, and the first one was around operational challenges and what I'm seeing out there in the market and what I'm hearing from people. And I think there was some simple bits of feedback that I was gathering together. You know, some people struggling in terms of running tenders and gathering together all of the information that insurance underwriters will require to be able to offer quotations. Everybody working from home, not having the same access to resources, struggling in a way to gather it all together. But also having other resources available ultimately in the process to respond to queries that are raised by bidders. That was mentioned as a bit of a challenge. One customer mentioned to me that their support from procurement professionals within their organisation was a little bit limited, and that was really partly because those professionals were more interested or more engaged in procuring other services and other supplies. in the pandemic. So getting support from procurement was a bit of a challenge. On the positive front, I think market engagement, we've seen good examples of good early market engagement over the last few months. Of course, we're all working in a virtual world. It's probably easier to set up in a virtual way than it is in a face-to-face environment. And I'm even seeing the benefit to insurers of being able to engage and involve other professionals within the organisation. So for example, in my organisation, I can involve senior underwriters in insurer days, get them engaged early, get them to better understand the risks. So that's a real positive.
Kevin, can I just interrupt you, because we have got a question that's raised and you've started answering it in your thing. So Jen's asked, what or who would the panel like to see or hear from if the buyer were to do an insurance open day before the tender?
Okay then, well I'll start that one. I mean, for me, I'd like to hear from people who are engaged in some of the more critical risks that's presented by any particular organisation. So if it was a local authority, I would normally like to hear from people who are engaged in adult and children's services around safeguarding. I'd probably like to hear from people engaged in highways and the risks that presents. Perhaps people from housing, if there are issues with high-rise blocks and potentially any cladding issues still within the organisation. And that would apply to others that offer accommodation, housing associations, universities, etc. So anybody at all who can help to try and get underneath the detail of those more hazardous risks. Other bits include things like waste risks, if there's any recycling that goes on, people that can talk about that. And people who are really engaged in risk management and not just giving lots of detail about all of the fanciful things that are being done, but about the impact that some of the actions are having. So off the top of my head, that's I think a good few people who we'd like to hear from, given the opportunity in an Insurer Day.
Thank you, Kevin. And sorry for interrupting you there, but where you were going, I thought it tied in nicely with this question.
Absolutely, and we're all really keen on market engagement, and I'll come back to it again later on. One other issue that got flagged was around doing pre-tender surveys. We have got people out there doing them virtually with support from customers, but if you've got a big and unique property portfolio, and there are some pretty unique buildings out there that I see from time to time, insurers are going to want to see them in advance. So how we can go about doing that. But I've got to say the insurance market is very much open for business. It might sound like there are issues out there, but I think most of us are working from home. The panel were all just talking before this and just agreeing that even despite lockdown, we're very much geared up and ready and waiting to deal with customer inquiries. So there were some operational challenges. I looked at issues around changes of risk, and we'll probably come back to it in a bit more detail. There's been an awful lot of change in the last 6 months. I think insurers have generally been trying to be flexible in their approach to changing risks. And I know we certainly have it at Zurich as far as we can be. But lots of examples of change of use of properties, some into Nightingale hospitals, storage facilities for huge amounts of PPE. There's another issue that we've had. A change in the emphasis of the role of public sector bodies. Delivery of services has vastly changed over the last 6 months. We've seen a growth in empty properties, which might be temporary, for example, schools in the first lockdown, but then again, permanently closed buildings, which are no longer of any use and become obsolete. Again, a bit of an issue for insurers. We've seen a change of casualty risks. Those associated with adult care are key at the moment. Functions delegated from upper tier organisations to others to support with the pandemic. And I suppose simple things like risks associated with more working from home, employers' liability, cyber risks, etc. So I'm just thinking about the changes of risk and how any organisation is going to need to be able to establish what those changes are when they come to go to tender. Because of course insurers are going to want to know exactly what's been going on. And the other point I think I had here from, which links in with what Simon was saying, is that going to be a massive focus on budgets. Organisations are reducing headcount. Risks are probably going to get a bit worse as a consequence. But then again, on the whole financial front, organisations are going to want to review their insurance program. They're going to want to try and make savings as best they can. But balancing that against the hardening market. So looking at new ways of doing things, bigger deductibles, etc., etc. And I think my word of warning, which Simon touched upon, was around about not asking for too many alternative quotations, because when it comes to pricing it up, and then when it comes to the organisations evaluating it, it becomes a bit of a nightmare. So a whole lot to think about, far more than that, to be honest, but, you know, massively changing world and a lot to really cover off.
Thank you, Kevin. Has anybody got anything else to add?
Can I just say on that, in terms of the quotations that you're offered, that's where the broker support comes in evaluating the quotations and determining the best option for the client in terms of price, cover, exclusions, restrictions, conditions, etc.
And we are seeing changes to insurer wording, Sarah, so that's quite important as well. As reinsurance treaties are renewed, that will become commonplace. So it is a bit of a sort of phased approach throughout the market. And some insurers don't currently have COVID-related exclusions, but by this time next year, we think everybody will have. The exclusions do vary, and some are quite tight and nice and concise and talk specifically about COVID or coronavirus. Others talk about all communicable diseases. And as Simon said, it's worth picking that up with your broker and making sure that you understand the implications of those exclusions on your organisation, particularly going forward and in some of the niche sectors like care.
Thank you. So now I think it's time to move on to the impact that the FCA ruling will have on the insurance market. Alex, do you want to take this first?
Yeah, can do, yeah. Yeah, so sort of general comments. The judgment passed down by the High Court is very complex, will apply to different wordings and different clients in different ways. It should be noted that the test case was limited to certain BI extensions, i.e. non-damage extensions, and doesn't open up broader BI coverage. For example, if the policy includes a pandemic exclusion, the test case isn't now going to mean a client has coverage. Yeah, as I say, the consequences of the judgment are nuanced and cover will depend on the precise terms of the BI extensions. I guess furthermore, it's a moving piece. A number of the insurers involved, such as QBE, have indicated they're likely to appeal the test case decision. So I guess the level of coverage is still to be determined.
Kevin, do you want to add anything to this from an insurer's point of view?
Yeah, please, Sarah. I think Alison touched upon it before around about you know, insurers taking the opportunity to clarify wordings and amend wordings where necessary, tightening up on loose wordings and any ambiguity. I suppose the big thing from an insurer's point of view is the impact on the earnings in 2020. A lot of reports out in the press suggest that insurers are relying upon their reinsurance deals to manage that impact on the 2020 earnings. But then again, touching back on, I think, to what Alison said before, the impact then on the reinsurance market, which, you know, will come back to bite the insurers, and then no doubt any increase in costs we pass back on to customers in the longer term. So for all, to a degree, it was a positive result for policyholders. There could be some longer term implications in terms of costs and cover.
Alison, Simon, have you got anything to add?
I just add some numbers to this, and just to explain the background to the FCA ruling and the High Court judgment. It was only based on 21 policy wordings and 8 insurers, and potentially in the insurance market there are 700 wordings and 60 insurers. So it's a very small sample that they looked at, and the judgment basically was that most of the policy covers provide for business interruption cover for disease, infectious disease, but not all, obviously. And some, provide denial of access. So these are the sort of non-damage covers of business interruption insurance. And also the judgment clarified that the pandemic and the government response was a single cause. So it wasn't a series of events, it was one cause effectively. So there are two issues with this. One is the ongoing claims issues from organisations, and I don't think the public sector were affected dramatically. It was small businesses that were really penalised effectively by the closures, etc. So there are two issues, as I say. One are the past claims, and the other is the insurance market approach going forward, which effectively means that they will be refining their policy wordings to make the exclusions more clear, if that makes any sense. I'm assuming that people are familiar with the FCA judgment, so that's taken a bit of a leap of faith to some extent, because it's very complicated. It was 150 pages of a review, and it was fairly inconclusive, to be honest, because it was only based on a very small sample, as I say. So it's ongoing. So in terms of the public sector, as I said, I don't think they were particularly affected by the decision, but they potentially will be going forward because of the implications that the insurance industry will apply to future covers.
Thank you. So we have mentioned quite a bit as the webinar's been going on about risk. So as next question, I'll give this to Alison first, is how can customers present their risk profile in this constant changing environment?
It's really difficult, particularly when you're looking at LTAs, long-term agreements of a number of years, to be clear about what your risk profile is going to look like on day one and the final day of your long-term agreement. And the best advice I would give is to be open and honest in as so far as you know. So if you've got something on the horizon, and I'm putting some of the current issues aside, so COVID and Brexit aside, but if you're thinking of forming a trading company, if you're thinking of delivering some services in a different way, if you signpost it in your tender, that's always a really good thing to do, because then you're preparing the partner insurer that you choose to work with for whichever line of business for what might happen in the future. Of course, that's stuff that you know about, and things will happen during the period of the LTA that you haven't planned for, and that's where we come back to COVID, etc. And as Kevin said earlier on, we've been through a period where many organisations have delivered services they never dreamt that they would deliver, and delivered their services in very different ways. And all you can do is speak to your broker, speak to your insurer, explain, provide as much information, and make sure that you work with them to make sure that things are covered. When you're preparing your tender document, the information and the detail that you include about your processes and procedures are really important, and your broker or your procurement team should be able to provide you with some advice about the level of detail that you need to include. And I know we're going to talk about clarifications later on, but you need to present as much information but not too much. So one of the things that we come across is a desire to include a copy of every single policy and procedure in relation to some areas. And I can see Kevin smiling because Kevin's clearly familiar with this. And that's not always necessary. What is necessary are things that are going to impact on the underwriting model. And some things just simply won't have any bearing. And what we don't want is the important things to be lost under piles and piles of unimportant things. So there is a real art to refining the information, making sure it is presented in the right way, making sure that underwriters can work with the information and analyse the data that's presented. Claims information should be presented in the right format as well, so that insurers, analysts can use it. If it's presented in PDF format, that's quite problematic. I think that's all I've got on my list. Kevin, I'm sure you've got a whole load of other things that you'd like to see.
Probably if I went through all the detail, Alison, I would. I mean, I completely agree with what you've said there, and you know, I certainly get the bit that you said. I smiled about overburdening insurers with what I call superfluous information. You know, we regularly get tenders in which have about 50 attachments, And with the best will in the world, I would say that half of them don't even get to see the light of day because you just ain't got the time to spend to go through it all. So I'm a big fan of keeping things simple. I'm a big fan of getting the key bits out there in the open. You know, if there's key stuff around the major risks, either in the ITT or the cover summaries, rather than an abundance of attachments that you've then got to go referring to. I like absolute clarity. I mean, I mentioned before the changes that are going on. I'd love to see them documented. You know, any recent changes in what the customer does or what they're planning to do in the next 12 months. Get it down there. I mean, I'll go back further step back to the Insurer Day again. You know, the market engagement early on. Get these conversations going then, so that you can get a view of what things the insurer wants to see. But I suppose also looking back at history, the one thing to remember is if what you're doing in the future is different from the past, try and make sure you can somehow cleanse your loss experience to make it reflect what it would have looked like had all these changes been in place at the time. I know a big job to do, but it makes sense if there's things that you don't do anymore that you're not going to do in the future. You know, get it out there and make it absolutely clear. And a little note here just about making sure that you remember the basics. Don't forget the basics. I saw some tenders come in last week for motor insurance where they didn't include a list of vehicles and the claims experience, but loads of other stuff about what was going on with the organisation. So in an attempt to get it all out there, they've missed the basic stuff. I think that's where I am in terms of the detail. As I said, don't want to overburden underwriters. There is a view that there's going to be an awful lot of tenders out in the market next year. Now that may or may not happen, and we'll come back to other alternatives that Alison touched upon before, like extensions and what have you. But the way things are looking at the minute, there could be a lot of tenders out in the market, and we don't want to end up in a situation where some insurers have to cherry pick. So everyone needs to have the opportunity to get a decent quotation.
Sarah, I can see a question from Jen concerning lots in a tender, which kind of ties in nicely here. So if I may just pick up on that. And some insurers have an appetite for certain types of business, and it really depends what you're looking for from your insurance program. Some clients like to deal with a small range of insurers, others are looking for the best economic option, and it's really worth chatting that through with your broker to make sure that you understand the impact of the lot structure that you're considering. Your broker will be able to give you some advice around the impacts of different lot structures, and how you put the lot structure together will impact on the result and what you're looking to achieve.
Thank you, Alison. Has Alex or Simon got anything to add before we move on?
Not for me, sir.
No, I don't think so. We'll wait for the next item. Yeah, that's fine.
Okay, that's fine. So I think the next one's a really, really important one, and I think this is what the customers are actually waiting for. So what should the customers be doing now in preparation for their upcoming insurance tenders? And I'm going to pass this over to Alex.
Yeah. Okay, so as Alison's already touched on, I guess early preparation is key. So there are a number of areas where authorities can get their house in order and undertake some pre-tender preparation. So I guess to start from the beginning, obvious steps, but ensure you have your broker in place well in advance of any tender process, be that via a direct award or mini competition. Agree your route to market. Obviously, we'd always recommend the YPO framework, Sarah. Is any actuarial input or claims analysis required pre-tender to establish optimum deductible levels? Obviously, the broker would have some involvement there. To assist this process, authorities will need to ensure its claims records, particularly for claims managed in-house, are accurate and up to date. And I guess accurate claims data will still be relevant even if the current basis of cover is to remain unchanged. Risk management input. Is there any input required pre-tender, and or is the authority able to evidence its policies and procedures, such as business continuity plans? Risk improvements. So if an insurer has surveyed an authority's premises in recent years, it's likely to have identified a number of risk improvement requirements. So have all these requirements now been implemented, and can they be evidenced? So some may require investment, such as fire suppression systems in kitchen areas. Others are quick fixes, sort of general housekeeping type tasks. For example, removing waste from plant rooms. So risk is going to be viewed far more favourably if an authority doesn't have a long list of requirements outstanding. It demonstrates how you manage your risk effectively. An authority should also try and identify areas where you're lacking underwriting information. Again, this will require brokers' input. For example, if an authority has recently completed on a large construction project, do we have sufficient construction and security information available? For larger properties now, insurers are commonly requesting survey information. Is this available? I think authorities should be prepared now more than ever to provide more in-depth information in comparison to previous tenders, particularly relevant now in relation to COVID risk assessments. So I guess ensure your policies and procedures are well documented. Across all classes of insurance, insurers will commonly raise a number of queries related to COVID. For example, what action has the authority taken to protect its staff and business risks from COVID? Or does the authority's business continuity plans address measures should board members or senior management be unable to carry out their functions? A final comment, we recommend opening up a dialogue as early as possible with authority personnel that are likely to have an input in the tender, so they can sort of dedicate time to the process. As we're working from home now, it's obviously more challenging to pin down certain individuals. So for example, your procurement team's going to have involvement. They may have the final say on the evaluation criteria, use of tender portals, and other aspects of the insurance tender documents. The estates team's likely going to have an input, providing a list of insured properties, reinstatement values. And your finance team are likely to provide financial estimates. So I guess the key message: start the process early, and try and get your documentation in order.
Thank you, Alex. Has anybody got anything else to add?
Can I just say, sorry, okay?
Yeah.
In a lot of cases, it's a good idea to start from the basics, maybe with your risk register, particularly if insurance costs are increasing. Maybe look at your risk retention levels in terms of excesses and self-insurance, which is where brokers can support you, looking at analysing statistics on previous losses, etc. Go back to your risk register. Risk registers have not been updated for a long time to include COVID contingency planning and such like, the mitigation involved in that, and also the insurance elements, and also look at the insurable risks, the uninsurable risks, and look at how you can potentially save costs in relation to insurance and risk management. The other important thing to mention here is the transparency of a broker earnings, where you need to be clear exactly how much is the broker earning in these on contracts, whether they're charging you a fee, and if they're charging or receiving additional earnings from the insurers on top of that. So that's the sort of questions to be asking. I think the way the market's going, if it's hardening, it's time for a complete review of excess levels, retention, risk management, value for money, add-on services and such like. So maybe go back to basics and look at your risks and see, you know, where the key points are, whether you need insurance, whether you don't need insurance, and look at your risk history as well. And each organisation will have its own culture of exposure to risk. So, you know, just go back to basics and look at your risk register and such like.
Simon, sorry, I was thinking something similar in a way, because my first thought was to consider whether or not a tender is necessary. And Alison touched upon it before. I never think it's a great time to go to market in a time of huge change. If the organisation's changing a lot, you know, can you realistically identify all the risks? Can you give assurance to the underwriters that you're doing things well? Many underwriters, if in doubt, will err on the side of caution with pricing and terms. So I always think it's a good option to think about, if it's possible, not going to tender. I mean, you know, YPO, yeah, there with your framework, that it doesn't help you as such, but it'll help the customers to think that through. And the other point is, I completely get the idea of reviewing your excess deductible levels, etc. I always think it's a bit of a bad time to do it in a tender, and I completely get why it's done that way, so you can get competitive pricing for all of the options. But often decisions are made in a bit of a, not a panic, but in a bit of a rush, when time could be taken to think about the appetite you've got for risk and what is the best fit for you in terms of deductibles going forward.
Yeah, that was the point I made in terms of reviewing everything prior to the review, if you see what I mean, in terms of exposure and you know, the organisation's exposure to risk and acceptable levels of risk. The other point, obviously, in a broker review or a YPO review, is do you go to a number of insurers, or do you select one broker to go to all those insurers for you? And there are a number of options available on that.
Alison, I know that you want to add something as well here.
And there's been a lot of talk about price, programme design and policy wording. The thing that's often overlooked, and in my opinion, customers don't always give enough thought to when planning a tender, is the service element of an insurance contract. And there are two parts to that, one underwriting service and the other claims service. And the insurance policy is only worth its weight when you have a big loss, and making sure that you articulate what you want from your insurance provider in respect of those two services are really important. And it's an area that we find a lot of customers just don't put enough time to. So articulating what you want, taking a blank sheet of paper, thinking about what has worked, what doesn't work, what you'd like done differently, and making sure that you actually get those services delivered in the way that you want them delivered. So obviously cover and price are important, but just don't forget those elements as well.
Thank you. So we've just had a question that came in quite early about advice around structuring a tender to encourage a range of bids from brokers and insurers. Alison, do you want to answer that one for me, please?
So Alex mentioned earlier on, it's really important to get your broker in place. There are a mix on the YPO framework. There are a mix of direct and non-direct insurers, but in order, and that means direct are those that will deal with the customer directly without a broker. Non-direct need a broker in place. So in order to access the widest range, you do need a broker in place, and then you'll make sure that you pick every insurer up. Even the direct insurers, the likes of Zurich Municipal, and I'm sure Kevin will have something to add to this, will happily quote where a broker is involved in the tender, and then if Zurich are successful, they will then set up a service arrangement going forward. So the broker appointment and the insurance placement, in my opinion, in Aon's opinion, should be two separate exercises. You appoint your broker and you send your broker to market. That's how you get the best from the market. If you send all of the brokers to market to try and get quotations for you, you'll have all of the brokers trying to speak to all of the same underwriters, trying to lock down exclusive deals, and that doesn't generally achieve the best for you, because some underwriters will just simply say they're not prepared to give exclusive deals, we're shutting our doors.
Can I also just say on that you also get maybe 5 responses from 5 different insurers, and you haven't got a single broker to evaluate those responses.
suppose in simple terms, if you use the framework, you've got access to all of the framework insurers.
Yeah.
And there
Exactly.
are, from memory, quite a substantial list of insurers on that framework.
There is, yes, and with it being a DPS, new insurers can come and join throughout the life of the contract. I'm just a bit conscious of time, and I know we've got a couple more questions that I want to ask, and some customers are asking questions as well. So I just want the attendees to know what brokers are doing to help and support customers with their upcoming insurance tenders. Simon, can I pass that over to you first, please?
Yeah, sure. Well, obviously we're part of the YPA framework, so that in itself means that we've gone through a vetting process in terms of satisfying YPA requirements, and that you can be confident that you're meeting, I was going to say EU requirements, but that's shortly to be not EU, but whatever new legislation comes in terms of procurement, that you will be meeting those requirements and compliance. So what was the question again? If we're
what are brokers doing to help
to
support customers?
Well, I think we sort of covered that to some extent, because each broker will do a ground-up review of the insurable risk exposures. We'll do a risk register review of the organisation, which, as I said earlier on, is sort of starting point. So using that sort of insurable risk exposures, we'll identify key insurable and non-insurable areas. We've also have a commitment to risk management, and most brokers will have add-on services for risk management, whether it's basic risk management in terms of health and safety, risk assessments, or maybe wider in terms of compliance in financial, reputational risk management. And we'll provide a risk profile of each organisation, which in simple terms will give the best result from the insurance market. We said earlier on that we wouldn't necessarily go to the market every year, or even every 3 years for a particular client. So we try and get a complete understanding of the organisation. One of the other things that we do is instigate a risk management forum within organisations to provide a discussion point or discussion area where we can provide review common areas of risk with different divisions within organisations and share ideas and initiatives, discuss incidents, near misses and things like that. So I don't know if that answers the question. I mean, insurance brokers generally have expanded beyond just providing insurance into providing ancillary services as well. So I think that's where we score, and obviously the basic point is that we can access the whole insurance market, as we said earlier on.
Thank you. Alex or Alison, do you want to add anything from a broker's point of view?
Just a very quick comment from me. I guess the broker's main aim is to identify gaps in the authority's information in the tender process regarding their risks and exposures, and sort of predict what information insurers will require. The key is asking the right questions from the outset to ensure the authority's presenting all the relevant information that insurers will require to evaluate their risk.
Brilliant, thank you.
So for me, I'm going to strip it back to sort of very basic principles, and I know we've got a mixture of people on the call today, and the insurance officers will find a tender daunting, and they will do an insurance tender once every 3 or 5 years. Procurement professionals are doing tenders day in, day out, but the insurance market works very differently to many other markets. And I think one of our roles, key roles as brokers, is to make sure that the insurance professional is supported throughout. So when I have that very first conversation, and when my team have that very first conversation with the insurance team, we just reassure them that it's not going to be awful. We're going to be there with them. We've done lots of tenders. We do probably 40 tenders a year at Aon, and we know what works, we know what the insurers need, we talk to the insurers all the time. So as their appetite for information changes, we feed that into our process. And it's just about providing a level of reassurance as well. And I know that sounds very touchy-feely and cuddly, but I think we all need a bit of that sometimes.
Exactly, completely agree. I know we mentioned this earlier about clarifications rising and things. So customers can expect to see more clarifications when they do run a further competition. So my first part of this question is, why is this, and what can customers and their brokers do to reduce the number of clarifications? So first I'll pass to Alison, then I'll pass it over to Kevin.
Well, I was going to pass to Kevin first
and
let him have a rant about all the bad things that brokers do in tenders. But we've touched on this an awful lot, and it's make sure that there's the right level of detail, make sure that the information is clear, concise, that insurers and underwriters can interpret it, and that all of your numbers add up. So it's something, you know, really simple things like if you put a spreadsheet in, do columns actually add up to the total that you put at the bottom, and does that total at the bottom reflect in your market presentation? And these details are things that the underwriters will check. The claims data being in a format that can be manipulated is really, really important. If we present, I mentioned this earlier on, if we present a PDF, it's no good to anybody, and the first question we get from the market is, can we have the data in Excel format? Insufficient data, I know we've all banged on about this a lot, so there's a lot of repetition here, but insufficient data and relevant data is really important. So Kevin, what have I missed? What are we doing wrong?
Well, not a lot's been done wrong, to be honest. I'm really quite sympathetic, because at the end of the day, you know, a lot of the organisations that we look at are really sophisticated insurance buyers with sophisticated risks to insure, and it can't be easy to comply with the duty of fair presentation. So I completely get that. It's really tough. There's some new insurers out there who are probably more likely to ask questions than others because they haven't got the background and experience. But an awful lot going on. You know, insurance companies are driven by their reinsurers and other stakeholders, regulators to know more and more about the risks, driven by their own shareholders to make sure they understand the risks and then produce a profit. So there's this whole drive for more and more information. But I do get a lot of it. It's just routine stuff, like you say, and it's stuff that's been missed off, or it's stuff that doesn't match together. I know one or two insurers who I always see their questions I can spot them a mile off, because they've got a bit of a bee in their bonnet about things not matching together in terms of the numbers. And there's the odd insurer out there who I think just bung in a standard set of questions no matter what it says in the ITT, which is a bit of bad form really to do that when you've not really spent the time to go through it. I'd like to think that my people would always spend a bit of time to make sure the answer isn't in there before they go and ask the question. I mean, it's great that all the answers are all shared. You know, that's great practice. I particularly like it when there's a log kept of all of the questions and answers, and that gets regularly updated and regularly shared. It's still a nightmare to maintain, I think. And if people are asking questions that have already been answered, for likes of you, Alison, the brokers and other customers, it must be a bit of a pain. And I don't really know what the answer is to cover off all of that at the end of the day. I mentioned before, not too many attachments. Try and keep the real detail within the key documents themselves. And at the end of the day, I think I'll go back again to the pre-market, the pre-tender engagement with the market. That can help to alleviate some of the problem, because you've got people in the room, you've had conversations, they've got to know a bit about the risk before it started. But I suppose nowadays, with the drive towards auditable information, we're all using portals to raise questions and answers. I think from an insurer's point of view, it's quite frustrating if it's a clunky system. I'd like to think that there's a much better way of raising questions and answers, but I completely get the process we've got to go through. So I'll go back again to the log, keeping the log and keeping that maintained as we go through.
Brilliant, thank you. We've got a couple of customers' questions which I'd like to get answered before we finish. So one of them is, our insurance company is encouraging us to extend at the end of our LTA. If everyone is being advised this, won't 2022 be just as busy?
Shall I go first, Sarah?
Yeah, go for it, Kevin.
Yeah, I mean, to be honest, you know, at the end of the day, we're all trying to manage a finite resource. And if I do some analysis of 2021 and find I've got 150 tenders due in, that's an awful lot. In the area of my focus is local authorities, police and fire. So that's going to be a lot of work to do. So I'm naturally going to try and reduce that number as much as I possibly can. You are pushing the problem further forward. It's been happening for a couple of years now. Even by pushing forward from 2020 to 21, which some customers did, that's given us a bit of a headache for next year. But then things change again. We've got in local government the whole prospect of reorganisation in many areas around the country. That's probably going to change plans, change things. But yeah, I completely get the fact that we can push a problem on, and we've got to manage the numbers in some shape or form.
Has anybody got anything else to add to Kevin's response?
It depends on the reason, to be honest, and there are a number of reasons why that suggestion may be being made, but we are definitely in this situation where the market is ticking up. So if you delay, there is a possibility that you may pay more. I haven't got a crystal ball, but there is a possibility that you may pay more in 2022, and you might be able to lock in a lower rate now, which may or may not be sustainable. So it may not be economically the right thing for you to do. If you've got claims exposure and some time to let those claims settle and mitigate and have a better story to tell in 2022, then that might be the right thing to do. So it really will depend on the circumstances, but it doesn't necessarily follow that you'll get a better deal simply by delaying.
Brilliant, thank you. And then the final one is, will insurers be likely to maintain their practice of holding their quote stroke pricing for 90 days?
We haven't seen any problems with this so far.
Brilliant.
I think it depends on the class of insurance, because obviously motor insurance is going to be different. It's usually only a month before, 30 days before. Otherwise, it's a bit up in the air in terms of other classes of insurance, I think.
The only area where we're seeing a particular problem, so even on the motor, the main public sector insurers are happy to provide a quotation a certain period out. The one point I would make is that if you do ask for quotations at tender a number of months out, any quotation will be heavily caveated that it's provided subject to no further deterioration in the claims experience, and any material claims will need to be declared. So that's a point worth remembering. So insofar as the risk doesn't change, we're not seeing any pullback on the availability of quotations. The area where we are having problems is around financial lines and some of the specialist financial lines. So I'm not talking about officials' indemnity, which normally sits within a casualty combined program, but I'm talking about specialist professional indemnity programs, etc., where insurers are running quite late and certainly wouldn't be prepared to quote 90 days out.
Brilliant. Well, I've just seen the time. I mean, this hour has gone by so quickly. So first of all, I'd like to thank our special panelists today and to the attendees. I really do hope that you found this really useful, this webinar. I will be sharing the recording. It will probably be early next week now when you'll get a follow-up email from me. If you do have any questions in the meantime, if you drop me a line on the email at insurance@ypo.co.uk and we will respond to any questions. Again, thank you to the panelists. I really appreciate all your support and supporting us in these webinars. Without you, we couldn't do it. And I'd just like to wish everybody a good day. Thank you for joining. See you later. Bye.
Thank you.
Thanks,
Bye.
Sarah.
Bye.